Anybody remember this? Michael Burry of Big Short fame just bet 1.6 billion on a stock market crash. This was from August 16th. You don't remember? Let's get into it a little bit closer. So Michael Burry, the Big Short investor who became famous for correctly predicting the epic collapse of the housing market in 2008, has bet more than 1.6 billion on a Wall Street crash. Now it actually wasn't 1.6 billion, that was the nominal value, as he bought put options to short the markets. Burry's making his bearish bet against the S&P 500 and Nasdaq 100 according to the SEC. His Scion Asset Management bought 866 million in put options against a fund that tracks the S&P 500 and 739 million in put options against a fund that tracks the Nasdaq 100. Alright, so this is really a catch-up video, and with that said, although Wall Street doesn't look good in red, contrary investor Michael Burry believes otherwise, taking the time to re-emerge on social media to boast about calling the recent market correction, and we'll get into it. While braggadocious behavior may be generally frowned upon, Burry, who doesn't always hit it out of the park, tends to be routinely correct, thus justifying his influence. To put the Crimson Tide in numbers, while the benchmark ETF is roughly 9% up for the year, it's down 3% in the trailing 1 month period. Regarding the high-flying tech sector, the QQQ has popped over 31%. Since January, however, in the past month, it slipped 2%. By themselves, these figures don't natively suggest a devastating market correction. However, Michael Burry, who came to prominence following his contrary bet regarding the 2008 subprime mortgage crisis, wagered heavily against the market early this year. Per CNBC, at the end of the second quarter, he owned 20,000 put contracts against the S&P ETF through his hedge fund. All right, so let's go to the charts now, and this is the SPY, and we'll go right to the weekly chart, and we can see this big level that price hit, $460 daily sellers level. And if we go to August, this is kind of when he bought his puts. Took some heat, but now as you can see, price is making lower lows, lower highs. So if he still owns these puts, he's doing quite well. How low can price go? Let's go to the daily chart. Price is now below the infamous 200-day moving average. Price can get to $400 without blinking an eye. However, the big level is going to be this massive level down here at 370-ish. Actually, this level is no longer valid. Technically, price closed below it, so we'll have to take that off the chart. And look where price did come to, 350, which was the previous high. Now serve that support. All right, so if we're going into a recession in 2024, prices can go a lot lower. This happens to be the October lows. Can we revisit it? Some folks are saying yes. Now what about the QQQ? Similar price pattern that we saw on the SPY. Price came up to a level of interest and then it's selling off. Again, going to the weekly chart. Price is making lower lows and lower highs. Same pattern, right? Now the line of sand for QQQ was this area of interest right around 350, which price finds itself currently in right now. However, when you look at the two extended range green candles, potentially there's nothing stopping price from getting down to this daily bias level, which would be the opportunity to go long. Let's go to the daily chart. I mean, you have a gap to fill at 330, but again, the chart suggests the best levels to go long is roughly $30 lower. Now, unlike the S&P SPY, where we saw price was below the 200-day moving average, price has not gotten to the 200-day moving average as of yet, and this would serve as dynamic support. So why is price above the 200-day moving average and the SPY is below the 200-day moving average? Well, the QQQ has been the strongest U.S. index this year, thanks to AI. So it's going to be interesting. Both the SPY and the QQ are breaking down, and if Michael Burry still has those puts, he's definitely in the black at this point. Thanks for watching. Subscribe. Please like the video.